Entrepreneurs, welcome back to this channel. My name is Paul, as you know me as the EMS guy. So in today's video series, we're talking about the topic of business plan. Now I'm doing it, it's not a big in-depth study, but we're doing quite a overview of the topic. So there's 7 videos covering a range of topics from the business functions, the concepts, the importance of a business plan, right up to the financial plan. So we covered that, most of the details in the business plan. Make sure you watch it. Remember to hit like, subscribe, and share with everyone. Okay, let's see you in the videos. Alright, entrepreneurs, we're back and we're talking about the financial plan. Now sometimes financial plan is like your cursor on a board, that it just disappears the moment you want to look at your budget or whatever. But it's an important part in your business. Actually, it's one of the most important parts. You can tell people anything about your product, they can get interested, have a great marketing strategy, know your executive summary, share your vision, your heartfelt vision, your mission, how you want to change the world, how it's going to be lucrative. And then like in Shark Tank or Dragon's Den, they're going to ask you, okay, so provide us some figures. What's your expected revenue? What's your sales stream? What is your liquidity ratio? And you need to be able to then field those questions, because that's what you need to think through. So a financial plan is details on how the business will get its immediate finances as well as the finances needed for future growth. Do you have enough savings that you saved up? Do you have an investment that you're going to loosen? Or are you going to go and borrow money at a financial institution? Or do you want to get investors to buy into your business? That's also why you want to know which form of ownership you have, because all of that actually plays a big role. Now your financial plan includes 5 aspects. The first one, it estimates your current and your future expenditure. How much you will spend on expenses per month for the next 5 years. Currently now, as well as in 5 years. So now that's kind of difficult. Think about it this way. 5 years ago, when we put in fuel, right, for our cars, that was around 10 Rand a litre. Who of us would have thought we would be turning at 25, 26 Rand a litre for fuel, petrol or diesel, in 2022, right? So you need to have an estimate, and that needs to be updated regularly. But your capital is the thing that will carry you through that until you're profitable and you can carry your own expenses. So you need to really think through and add maybe a bit more, so that you don't sell yourself or your business plan before you actually start up. Right? Because if you don't have cash flow is really the most important part in the business. If you can have a consistent cash flow, it means you can pay your expenses, suppliers, your salaries, and that your business can stay open. The moment you don't get income but you have expenses, somewhere that will dry up, and then if you don't get your revenue stream coming in quickly again, they're going to start selling your assets at a lower price. That's something you want to avoid at all costs. Second one is, it's a plan of how you're going to spend the capital that you raise. People want to see that you approach it systematically, step by step, and that you're not just going to blow it on anything. You want to buy equipment, vehicles, a building, maybe just rent for the first few years, then you're going to build one. This is your plan. You want to wait for expansion. That's systematic and that's thought through, right? People want to see how you're going to spend it. Next one, we talked about cash flow. Third one, profitability is the fourth one. If your business is not going to be lucrative or profitability, people will not want to invest. They want to see how you're going to turn profitable. Remember, you need to enter the market first. And before you can enter a market, your price will have to be low. So people will have to get used to your product and really want it that much and see that it's such high quality that they're willing to pay a better price for it. And that's why you need to be profitable. Last one is you need to be able to show a cost breakdown of every single part of your business. How much will your salaries cost? What is your rates that you're going to use to pay your workers? Is it in line with the national minimum wage if you're going to go that route, or bargaining councils? How you're going to apply increases? How you're going to calculate your cost for fuel if you have trucks? All of that is important. Okay, so when we look at capital, you have to make sure that you cover that in your startup cost. So that's all your fixed assets, your machinery, equipment, your vehicles, as well as your quantity and your price of the raw materials that you require. So in your startup cost, you need to make sure you cover all of that already. Now, that can be done in two ways. Are you going to borrow capital or are you going to use your own capital? Remember, if you borrow, you have to pay it back in a period of time. You have to pay it back with interest. And then you have to have all of those loan details specifically. It must be in your business plan. People need to see, this is how long it's going to take in order for a person to pay it back. So if you're going to go to a bank for a loan, you're going to have to give them the whole plan of how you're going to spend the money before they give you a loan, so that you can put this in your plan. Then you have your fixed cost. That means the cost, it stays the same. It doesn't matter how many units you produce. That's like your rent expense, your cell phone. That's a fixed cost. You have variable cost as well. That changes depending on how much units you produce. So let's say you produce 1,000 pairs of shoes. Your rent still stays the same. Your cell phone account still stays the same, pending if you didn't go over your limits. But your raw materials change. Why you bought raw materials for 1,000 pairs and not for 100 pairs? Your water and electricity change because that's part of per product cost. You spend more electricity, more water on the cost. So if you have your fixed and your variable cost, that together totals your total cost. Now you understand what's your total cost per product. Remember, in that should be your salaries, in that should be your bonuses, if you offer bonuses, your incentive cost, your vehicles, your fuel, all of it should be covered in your fixed and variable cost because you need to cover all areas, remember that. Now when you have your total cost, you need to add profit to it, which means that is your selling price. And once you have your selling price, you know if you can be profitable. People compare it to competitors, and that's when you look at your profitability or your lucrativity. Okay, last one. When you have looked at your profit or your liquidity, how quickly you can turn your fixed assets into cash, you have to put up a few financial statements. That's your income statement, balance sheet, and your cash flow statement. That's something that all investors want to look at. What's your projected income statement going to look like for 3 years? Now, if you don't have any financial backing, you need to go to an accounting firm or someone with some financial acumen to help you create the income statement for 3 years. You have to have a balance sheet for 3 years. So this really requires you to sit down, understand, and think it through what's going to be cost realistically, etc. And if you then do this well, you will have a really good chance of making sure that your business operates. So thank you for joining. I hope this works. All the best for starting your business, and start. Go for it.